If you are thinking about purchasing a home with an FHA loan, particularly if you are a first-time home buyer, you must understand a few key elements of this mortgage loan. That being said, there are 3 huge FHA mistakes I see home buyers making on a regular basis. What are those 3 mistakes? Let's talk about it. What's good, everybody? My name is Parker Gray, and I'm your friendly neighborhood realtor out in Kalamazoo, Michigan. And as previously mentioned, today I am talking with you about the 3 biggest FHA loan mistakes that I see home buyers make since, well, I work with them every day. If you feel you learned something valuable today, please consider subscribing to support the channel and tap that notification bell as well so you can be notified when I upload new informative content in the future. So FHA loans for first-time buyers are a great option in many cases, though you don't have to be a first-timer in order to qualify for them. The 3.5% minimum down payment is lower than that of other comparable loan programs and has a lower credit score requirement as well, making it a very appealing loan product for many people. However, FHA loans are government insured and were implemented by the Federal Housing Administration, hence the moniker FHA. Since the government assumes risk if these loans default, there are stiffer regulations on them than, say, a conventional loan, as the Federal Housing Administration wants to protect itself and ensure that the houses being purchased with their mortgage loans are safe. Now that you understand that much, let's get into the 3 major mistakes I see homebuyers make when dealing with FHA loans. The first being not understanding the FHA home appraisal requirements. I mentioned that the FHA itself is concerned about the safety of houses being purchased with their loans, so they have specific guidelines regarding the appraisal of the home. While conventional appraisals are typically only concerned with the valuation of a home, FHA requires the appraisal process to include an inspection of the home as well, and the home has to meet minimum health and safety standards in order for the loan to actually be approved. If any of those deficiencies in the house are noted by the appraiser, the buyer and seller must come to terms on getting those things remedied, or you cannot close on the home. So you see the big mistake yet? No? Well, see, if you aren't aware of the big minimum health and safety requirements, you may mistakenly try and buy a home that has notable deficiencies, and that may kill your purchase if, and more than likely when, they come across an appraisal problem. Now, what are those health and safety standards, you may ask? Well, all you gotta do is comb through literally over 1,000 pages contained in the FHA handbook. No biggie, easy enough. I'm only kidding, you don't need to read through that mammoth, but it is good to know the main things to look out for, and there are great resources like Investopedia.com that give you a comprehensive list of items to watch out for, and perhaps I'll touch on those in more detail in another video. But for now, I'll throw a link to the article down in the description box below for you to take a look at. What I will say is that the most common FHA problems I have personally run into are peeling paint, missing handrails on stairs or decks, compromised roofing, missing GFC outlets near faucets, etc. Now, just because some of those things may be visually apparent on a property, that doesn't always mean you should just avoid it altogether, as some of those things are minor fixes that can easily be addressed, while others are much more difficult and expensive to deal with. A house with a missing GFCI outlet where one is necessary might cost $100 to fix, so you shouldn't let something small like that deter you from making an offer. Whereas that house with water in the basement, a collapsing roof, a bad foundation, you'll probably want to steer clear of that, unless you're using an FHA 203K renovation loan, which is specifically designed for properties in disrepair. As a real-world example, I had a client recently that purchased a home with an FHA loan, and it happened to have peeling exterior paint on the siding and soffit. The appraiser flagged the paint, and it was beginning to get too cold for repainting. Fortunately, the seller agreed to paint it and completed it just in time before it would have been too late, but it could have easily gone the other way and forced us to walk away. So you can certainly see that educating yourself up front and talking to your trusted real estate advisor such as myself about FHA loans can help you avoid FHA inspection mistakes. The second mistake homebuyers make dealing with an FHA loan is not understanding the mortgage insurance premium. Now, this isn't nearly as costly up front, but it will cost you in the long run. Most loans require insurance if you are putting less than 20% down on a house, because putting less money down signifies a higher risk of default, which is offset by banks charging an extra monthly fee on top of your mortgage payment each month. With a conventional mortgage, this insurance can be removed when you reach 20% equity, but with FHA, in most cases, if you put less than 10% down to start with, such insurance will exist for the entire length of your home loan, no matter how much of your loan balance you actually pay down. That being said, as a home buyer who has the ability to qualify for a conventional mortgage, which, pro tip, often can offer a similar low down payment option, it may be a mistake to finance with an FHA loan because you will end up paying more money over time with mortgage insurance, as opposed to the insurance simply falling off entirely when you reach a high enough equity position in the loan. That said, if you don't plan on staying in a house for a long time where you'd have the chance of removing mortgage insurance anyways, or plan on refinancing into a conventional loan at some point, this wouldn't matter all that much. Nevertheless, it's good to know if you have the option to go conventional, since saving money over time may be important to you, especially if you plan on staying there for a long time. And that brings us to the third biggest mistake that home buyers make when using an FHA loan, and that is not saving enough money. Now this one's rather tricky because you only need to save enough money for your down payment. Technically. In theory, you can have a seller contribute money towards your closing costs, but in the kind of market it's been for the last few years, expecting that to happen is indeed a mistake. FHA loans have an upfront funding fee, so the closing costs associated with an FHA loan tend to be higher than that of other loans to start with. And trying to get a seller to pay closing costs in a seller's market is extremely difficult as it is. Calling on my own personal experience as a realtor, a buyer needing closing costs covered in a multiple offer situation makes it significantly less likely that their offer gets accepted. This is due to the fact that it lowers the net offer to the seller and sometimes gives the seller a notion that the buyer is less financially capable to purchase. So it's a hard sell for them to accept that if they have another offer void of those things in hand. That isn't to say it's impossible to buy while needing closing costs covered in a seller's market, and I've helped clients do that very thing. But I'd be lying by omission if I didn't tell you that it's best, if you can, to spend the extra time saving more money so you can put yourself in the best position possible to win the house you fall in love with when it comes time to make your offer. Even if you're in a buyer's market where it is easier to get a seller to cover closing costs, I always think it's a good idea to have enough saved to cover them, because it gives you something to fall back on if a seller doesn't want to pay them. And in any situation, FHA loan or not, it's always just a good financial decision not to deplete every last penny from your bank account, as there are things you may want to fix or update after closing, or an unforeseen repair presents itself shortly after you purchase. So what questions do you still have about FHA loans? Let me know down in the comments. And be sure to leave a like on the video if you enjoyed, subscribe to the channel, and follow me over on social media if you want to keep up with my wild world of real estate. And if you're in need of real estate assistance anywhere in the United States, be sure to drop me a line, as I can either help you directly here in the Kalamazoo area or refer you to an excellent agent in yours. Thanks again for watching, and I'll see you next time.